Hi, good morning, everyone. Sorry for being a couple of minutes late. Thank you so much for joining us today. I'm Marc von Grundherr, Director of Benham Reeves, and I'm sure I'm not alone in saying that having worked in property for 25 years, 2020 is unique. Times like this are tragic, of course, and our hearts go out to those suffering from or helping us through this virus. But sadly, the press revels in these moments. Their headlines often exaggerate the sense of panic, as we've seen with promises on a Sunday that our kids will be back in school in a few days, followed on a Monday by claims that we'll be social distancing until 2021. So what I hope I can do right now is to cut through the hyperbole and explain what's actually happening in London at a ground level. Because we may be working largely from home, but the market continues to move. And we're seeing it from the perspective of developers, tenants, and landlords based around the world. And we have spoken to them about what we and they expect to happen in the coming months. This isn't just a lecture though, so please send through your questions and I'll try to answer as many as I can before the end. So those are all big promises. So I'll just give you a brief piece of context to explain why we are in a strong position to fulfill them. Benham Reeves have been established in London property for over 60 years. We've got 16 branches across London, and internationally we're in Hong Kong, Singapore, KL, Shanghai, and in India. We have 3 offices in Delhi, Mumbai, and Bangalore in India, and recently in Dubai, covering Kenya and Africa. And as an investor's agent, our international offices are on hand to support clients through the life cycle of property ownership, with advice on investment and carefully guided support through the process. And 65% of the properties we let are fully managed by us. So very briefly, what do Benham Reeves do? Well, in a word, everything property related. We give investment advice, what to buy and where to buy. We help with the handover and snagging, so you don't have to fly to London and do it. We go and check the property's finished. We then furnish it for you through our sister company Instar Direct. And if it needs a new kitchen or bathroom or decorating, we can do refurbishment for you. Then we let it, we find a tenant, reference them, collect the rent, and then we deal with the property management, dealing with any maintenance issues. And finally, we do tax returns for overseas investors. And we do it all in-house. Nothing is subcontracted. So we've never have to let a client down, which is particularly important if you have a tenant moving in. So all this means that we are experiencing the impact of COVID-19 from every property-related angle. Clearly, we'll have to deal with it for a little while longer. So it's worth looking at what is now happening in China, the first country to enter lockdown and the first one to start opening up. Well, the numbers are remarkable. Look at this. Pre-COVID, in December 19, the average daily number of residential transactions across 30 major Chinese cities was 5,760. And on the 8th of February, at the height of the crisis, only 22 residential sales were achieved. But by 31st of March, it had jumped and exceeded the previous figure to 5,976. In fact, a project in Wuzhong district in Suzhou sold 1.2 billion yuan, that's 136 million pounds worth of homes, in 1 minute online. And 90% of the homes were sold within an hour. And we in the UK are only 2 months behind China. So back in London, I'm not going to pretend times are easy. We're experiencing a black swan event of huge magnitude, unpredictable, unheralded, and frightening. And it followed 3 international issues that all had an impact on international investment and business. The escalation of the Russian-Saudi relations, the US-China trade dispute, and of course Brexit, if you still remember that. So things were getting pretty interesting before February, but as COVID hit, the London property market froze. Developers were forced to cancel all overseas exhibitions. Demand for rental properties fell by 55% in March, and there was a 70% drop in demand to purchase. What may surprise you, though, is the inverse of those numbers. 45% of rental inquiries held up, as did 30% of buyers. And that's because some people, including key workers, they need to move. Others are planning for when they can move. And there's a third group. They just know that an opportunity like this won't come around again. Every day now, we're registering new tenants and buyers, and even in lockdown, we're still letting properties every day via virtual viewings. And recently, Zoopla has just reported an increase in rental inquiries of 30% in the first half of April. For those looking to invest, this is a unique time. It wasn't so long ago that London property became the first and foremost a source of solid yield. But right now, investors can expect capital gain once again. And why is this? Well, there are a diverse and compelling set of reasons, driven crucially by the knowledge that although this is a crisis and it has huge financial ramifications, it was not caused by any fundamental financial weakness. And secondly, thanks to the experiences of the past, the UK government acted very fast, intervening at a scale never seen before. These are absolutely tough times, but these measures will ensure we come out hopefully unscathed. Borrowing was already cheap, but it's even cheaper now because of COVID-19. Bank of England base rates have never been lower, 0.1%. And unlike the financial crisis of 2008, banks are fully capitalised and want to lend. And with global markets in turmoil and money in the bank actually losing its value when inflation's taken into account, property yields of 4 to 5% look increasingly enticing. Sterling, which had never fully recovered from the Brexit turmoil, has taken another hit. This means that overseas investors can benefit from a sterling discount of up to 30%, effectively enabling an investor to buy at the 2014 exchange rate. And from April 2021, overseas buyers will have to pay an additional 2% stamp duty. This was already creating pent-up demand, with many planning to beat the deadline, and they're still waiting to pounce. Meanwhile, developers are now offering decent discounts. Many have completed units, which they need to sell in a buyer's market, so there are good deals to be had. But let's not lose sight of what really matters. Whatever the context, people still need a roof over their head. London's population continues to grow, demand continues to exceed supply, and London has proved time after time that it's an extremely resilient city, be it in the face of recession, terrorism, or even illness. Property has always been a great safe haven during a crisis, and nowhere more so than London. First, there's business. There's a significant post-Brexit investment by international giants like Bloomberg, McKinsey, Citigroup. Second, there's finance. London has the highest concentration of financial and professional service firms in the world. Then there's tech. London, as everybody knows, has a very strong tech sector. Google, Amazon, Snapchat, Apple have all announced new headquarters, and UK tech investment recorded £10.1 billion last year. Amazingly, more people now work in fintech in London than Silicon Valley or New York. And then there's education. London is the leading academic hub. It's consistently ranked as the world's top student city. Incredibly, 450,000 overseas students study in the UK, contributing over £20 billion to the UK economy every year. And then there's the rental market. 1/3 of London households live in private rented accommodation. That's the biggest shift in property that I've seen over the 25 years. And it's only going to increase further, with PwC forecasting that by 2025, that figure will reach 60% of Londoners renting. They're effectively become your tenants for life. And finally, the economy. The UK is the world's 6th largest economy, and London's economic growth is double the rest of the UK. And things are going to get a whole lot better with the completion of the incredible Crossrail project. So that's the context. As ever, the world is currently split into 2 groups, the optimists and the pessimists. Well, pessimists point to the IMF's forecast of a 3% contraction in the economy this year, whereas optimists look at next year's forecast of 5.8% growth. And to quote the IMF itself, there's no reason why the economic effects of a health crisis should linger in the way that long periods of slow growth generally follow financial crises. And at Benham Reeves, we are cautiously optimistic. This is a crisis, of course, with financial implications, but it's not driven by finance, which means banks are fully capitalized and keen to lend flexibly. There's no semblance of a pre-crash bubble, as house price growth has been low for many months before, interest rates are almost zero, and the UK government has acted so fast with its unprecedented interventions of £330 billion of government guaranteed loans, furlough scheme for employers, and no rates for many businesses. Experts predict that these measures could save 800,000 jobs when the country emerges from this crisis. So what should you do next? Well, most importantly of all, and this really is crucial to create some context at a time like this, never in London's many centuries of history has there been a crisis from which markets and house prices have not bounced back stronger. And that includes the Spanish flu of 1918, the Great Depression of the 1930s, the stock market crash of 1987, 9/11, the credit crunch, or Brexit. So if you're looking to sell, then the process might be a bit drawn out. So I'd advise adopting a wait and watch approach. If you don't need to sell, then my honest advice would be to hold and wait till confidence has returned. This is a buyer's market. And when that changes, remember that a well-dressed house sells for disproportionately more. And our sister company, renowned interior designers in Style Direct, can do this brilliantly for you. And looking at lettings, well, there are indeed short-term challenges for landlords, with tenants who've either lost their jobs, are on the government furlough scheme, even left the UK to wait out lockdown at home, who are now asking for rent reductions. This will inevitably cause some downward pressure on rents, but this will be short-lived, as shown during the global financial crisis, where the London rental market recovered very quickly. Landlords simply need to be flexible and empathise with their tenants. Some landlords will naturally be worried, but our experience suggests that most tenants are not having issues. And again, ignore the paper talk and deal with reality, which is not all doom and gloom. I re-emphasise that we're still working, we're valuing, we're listing, we're leasing, and we're doing some sales. So just get in touch if you've got any queries. The market remains on temporary pause. So now is the time to do your homework and get your tactics in place. Look at what to buy, where to buy, and what to expect. Look at who will want to rent it, what they'll need, from bus links to schools to parking, from professionals to students, families to singles, consultants to mid-management. Different properties become relevant. But when you have made those decisions and done your sums, I firmly believe this is a time of opportunity and indeed a great time to invest. Low interest rates, discounts, strong rental demand, get in ahead of those waiting to buy. And finally, for overseas buyers, the cheap pound. If you look at previous crises like 1998 or 2008, the London market always bounces back with strong growth. And Warren Buffett's quote I love, widespread fear is your friend as an investor because it serves up bargain purchases. Whether we're talking about socks or stocks or even property, I like buying quality merchandise when it's marked down. And there's never been a time in history that London property didn't bounce back from being marked down. So are banks still lending? A lot of people are worried about that. I thought I'd quickly touch on it, as it's a key part of investing into London property. And the short answer is absolutely yes. Contrary to some media reports, the market is not closed. Most lenders are lending, albeit things are taking longer, with rates anywhere from 3% and loan-to-value ratios up to 70%. But it's more important than ever to now use the right mortgage broker to ensure you get the very best deal available from the right bank for you. So now just looking to our forecast for property in the UK, and for sales, UK house prices increased by 2.2% in 2019. In London, they rose in March by 2.4%, their highest rate since before the Brexit vote. Rightmove saw asking prices rise by 5.1%, with a 34% increase in agreed sales. So the revised forecast for 2020 is now a 3% fall in the UK, but with prices in central London remaining flat. And over the next 5 years, average predictions are 13 to 18% growth in London sales prices. And in fact, Savills are predicting only 12.4% in prime central London, suggesting that investors should be looking to outer zones 2 to 5 for the best growth. Even the media have not been predicting dropping property prices as they've done in the past. And on the lettings front, forecasts are for a 15% growth in London rents over the next 5 years, as predictions are that 60% of Londoners will be renting by 2025. So the best opportunities exist during a crisis. If you ask anyone in Asia, when was the best time to buy? They always say during SARS. And while COVID-19 is different, it's still a crisis. And history teaches us that crises are horrible and scary, but they always pass. And they're always followed by an upturn in London property, particularly when interest rates are so low. So prepare carefully, decide exactly what you want and when you want it, but don't look back and say, I missed that chance. The key is to take the right chance, one that ticks every box. And Millbrook Park, in my opinion, is one of those, which we believe in so much that as a company, Benham Reeves are offering a rental guarantee on it now. So now I'm going to hand over to Stuart Leslie, who's joined us as he's International Sales and Marketing Director of Barratt London, who's going to explain a bit more. And after Stuart's finished, we'll both be happy to answer any questions. And I can already see quite a few coming through, which is great. So thank you very much. Keep them coming. Over to you, Stuart. Thank you.
Thanks very much, Mark. Good morning, everybody, and welcome to what was a great roundup of the current situation. And I would just mirror Mark's words and sentiments, really, that as a business, we plan for the worst, hope for the best, and we have contingency planning in place already to bring the business back as soon as we get through this curve, and inevitably we will get through this difficult situation. But we, as a responsible business, we will put our staff, the well-being of everybody involved in the business first and foremost. So without further ado, thank you very much for the introduction, Mark, to Millbrook Park. It's a really exciting project in northwest London. I'm just going to take you through a very brief overview of the company at first, for those of you who don't know Barratt London and Barratt Homes. So we are a brand of Barratt Developments PLC, which is by volume the largest developer in the UK. Barratt Developments has a national footprint delivering new homes throughout Britain, and we operate through 6 regions and 27 operating divisions. We build both private and affordable housing, and in our last financial year, we delivered over 17,500 properties. Barratt Developments has a broad product offering from our private homes with prices from £70,000 to more than 3.5 million, and we did have up to 10 million in our prime central London product as well. So the company was founded in 1958 by Sir Laurie Barratt. And I think it's really important when we're looking at businesses to deal with and transactions to do. We very much do these things on an emotional level. You know, there's a reason why people say it just feels right or it just doesn't feel right. And I feel very comfortable presenting the story of Barratt Homes and Barratt London, because despite being a huge volume-driven business, we really came from grassroots of family values and affordable values. So Laurie Barratt wasn't able to afford to purchase his own property. So he actually ended up building his own property in 1958. And that set the milestone really as the beginning of Barratt Homes. But the business has always been run on the values of good quality, affordable properties in good places for people to live in. So it's really on that basis that we've driven the business to a huge machine that it is today, now listed on the London Stock Exchange since 1968. And we do pride ourselves in our Home Builder Federation 5-star customer rating. We recently just were given the 5-star rating for the 11th year in a row, which is the longest standing award of 5 stars of any home builder in the UK. We also have more external NHBC awards for build quality than any other developer in the last 14 years. And I urge you, if you get the opportunity, to go on site and to visit the construction sites and to see this amazing machine at work. We very often just see the brochures and the sales and marketing suites at the front end, but there's a huge business behind it that is working away to deliver those 17,000 plus homes. So it's really important at the moment that we look at the financial performance and, most importantly, the confidence and deliverability of the product. When people are buying from overseas, quite often they won't have heard of the brand or they won't have interacted with the brand, albeit it is a huge FTSE 100 company. So the strong financial fundamentals of our business, really looking at year on year. This year we delivered 17,856 properties, which was an increase of 1.6% on the previous year. Our operating margins increased to 18.9%, which was an increase of, again, 120 basis points. Profit before tax was just under £1 billion, an increase of nearly 10%, 8.9%, and the ROCE, which is return on capital employed, increased to 29.7%. Net cash on account, 765 million. So what that really means as a consumer is that you should have real confidence in the strength of our balance sheet, the operational strength of our business, and the financial strength of our business to take us through any unprecedented situations that we're facing at the moment. Now, at the beginning of this crisis, we took a really socially responsible approach and we shut down all of the construction sites and very quickly shut down the sales and marketing sites as well. We've maintained those sales channels through our agent network, like Benham Reeves and Marc and his team, but also across the globe, we work with many different introducers and agents, and everybody, including our clients, have received constant communication. And we've also run a series of webinars to make sure everybody is in touch with what's going on in the business. So just looking at the environment at the moment, as Marc touched on, we have unprecedented low levels of interest rates for mortgages. And we have a fantastic Help to Buy scheme as well, which is backed by the UK government. Before any stimuluses came into place, this was already in place. And almost all of our product across the UK is able to go onto the Help to Buy scheme. This is a government-backed scheme to help people get onto the housing ladder. That government target of 300,000 homes is a pipe dream at the moment. And we as a business are delivering 17,500 properties. But as an industry, we are falling well short of 300,000 homes per year, which is the government target. And I think that really is the message for us as developers at the moment, is we must be able to build as quickly as possible, going back to work after this COVID-19 situation subsides. We have a huge task to do to deliver homes and properties across the UK for people who really need good quality homes to live in or to rent out. So we really are building our contingency planning, coming back to work on maximizing the volume output for our business. But I can assure you of this, whilst construction sites across the country continue to be closed and have been closed for several weeks, there will be a spike in demand and there will be a supply issue as far as more properties coming to the market. So we do have a huge land bank and a huge opportunity to bring lots of properties, but I think it's really important that if you are looking to buy a property now because you need a property to live in, or you wish to take advantage of the opportunity with the currency, as Marc highlighted, it's really important to get in early and to make sure that you secure the best possible properties. So our business model, I'll touch very quickly on this. I am under a very tight time frame this morning. So we have a very great land bank that is there ready to deliver properties for the next 5 years. So there's no issues with our supply chain, and certainly our subcontractors and our construction workers and our materials have all been protected for the supply chain as well. So we're very confident as soon as we go back to business, we'll be at full operating power. We have outstanding designs, and as I mentioned, we're really proud of our construction excellence and efficiency, which really drives that return on capital employed here. Ultimately, the better and more optimized our build program, the cheaper we can deliver houses to the market, and that's our strategy. So we innovate our sales and marketing activities, whether it's iPad apps, whether it's webinars and video, and you'll be seeing a lot more as the industry changes towards this remote selling and towards planning for future disruption to the industry activity. I'm sure you'll see a lot more video, a lot more interactive and online activity that will be coming. So industry-leading customer service is at the heart of everything we do, and we do deliver a 2-year guarantee across every product that we deliver. And of course, for our shareholders, the finance of the business is important. So just looking at the fundamentals of the market, as Marc said, I'll just highlight the average growth here is really important to keep in mind, and don't worry about the blips along the way. If you're really lucky, you can buy right at the bottom of the market. But when you start to see a resurgence in the market, it's also a good time to buy. And no doubt the London market will continue to grow over time. We never suggest to our buyers that you should buy for short-term gain. But many of our investors and buyers across the UK have enjoyed really excellent capital growth over the last 5-10 years. So really keep in mind that medium to long-term investment strategy and you'll be absolutely fine. So I'll talk to you very quickly about Millbrook Park. This is a project that we have in northwest London. So it's right next to Mill Hill East Station and literally just 20 minutes commute from central London. What I would highlight at this stage, looking at this sort of macro map level, is the amount of green space that's available across the suburbs. So this is, although very close to central London, a fantastic rural project that has access to the Totteridge Valley and the green spaces around London. So Mill Hill East, it's in zone 4. It's 1 to 2 minutes by foot to the tube station. And if you look at the map here, which is the Thames Link, you can be in Luton Airport through to Blackfriars and even to Gatwick in less than an hour. So Mill Hill Broadway National Railway runs across the county, and Mill Hill East Underground Station is connected through to the Northern Line, which gets through to Euston, King's Cross Bank and the city in under 30 minutes. So a really fantastic location for people to live with a good quality of life, but close to the city. By car, it's at just 6 minutes to the M1 and through to that North Corridor, 7 minutes to the Northern Circular and 9 minutes to Mill Hill Broadway shops. So it's really well connected location. On foot, even 2 minutes to Mill Hill Underground Station. That's just 2 minutes to the nearest underground station and then 20 minutes into central London. It's 5 minutes from a huge Waitrose in the local area and 5 minutes to Virgin Active Health Club as well, which has swimming pools, tennis clubs, and everything else that you'd need for your leisure facilities. We also have 20 minutes to Mill Hill Village, which is a fantastic rural village, quintessentially English, and obviously you have access to the airport there as well. So I'd highlight again the lifestyle and family borough that is the borough of Barnet. You can see the typical views and landscapes that you can see, these park areas, these rich landscapes of trees and open spaces, giving real lifestyle quality to everybody who buys in the local area. The Totteridge Valley is a fantastic protected green space that we'll highlight a little bit later. But surrounded across the local area around the development, we have excellent wealth and lifestyle facilities. So there's a wealth of amenities on your doorstep. We have a regeneration of the Brent Cross Shopping Centre, which is a massive regeneration. I did mention the Waitrose supermarket, but there is the Waitrose effect when you're talking about property, and it is not a metro Waitrose, it is a fully fledged Waitrose supermarket. It's got quintessentially village high streets. It has a golf course just on your doorstep, and also has access to equestrian centres and rugby clubs as well. So the local economy has a wealth of retail options. This highlights here the Brent Cross regeneration scheme, which is going to have multiplex cinemas. It's going to have loads of retail space. It's going to have cafes and restaurants. And with that will attract improved infrastructure as well. And this just shows you the Waitrose front, showing that, you know, it is a massive store just on your doorstep from Millbrook Park. Mill Hill can boast many primary and secondary schools which rank good and excellent on Ofsted as well. So they're not just, you know, some of them independent schools, but they're not just academic locations. They're places that people create relationships for life, play sports, and learn the essential life skills. So looking at the list of first-class education opportunities here, you can see you have good and outstanding schools across the borough, which are available to people buying at Mill Hill. So Mill Hill, higher education, again, we have many students who've moved into the development, both undergraduate and postgraduate, attending Central St Martin, UCL, and various other colleges across the capital. So Millbrook Park itself, this is a regeneration project including 8 different developers. This is the massive master plan regeneration scheme here, but I will highlight to you the Barratt London section here. So we've secured a property which will, in total, it will be 2,240 properties, but we have one of the best sites in the development, arguably the best, being closest to the underground, the Waitrose, and the health club as well. So it will complete in 2024, but looking back to the history of the location, so Bitsy House and Farm were the main estates until 1860. By the 1890s, surrounding areas, there were a couple of shops, including fishmongers and general stores, and in Mill Hill East, it really became the centre of the village, and you can still feel that village feel across the local area. Mill Hill Barracks was a really fundamental engineering and infrastructure area for 1905 to 1961, and during the 60s and 70s there was a large number of houses being built in the area, really highlighting that demand for the rural lifestyle but still close to central London. So here is the project. Let me just go back one slide. So here is the project here. So this is the dream suburban lifestyle. You can see the Tosheridge Valley in the distance here, and the outline of the regeneration area here is really just the doorstep to this beautiful green space. Our project area is highlighted in red here, and we are already massively progressed with the construction of the development. So here it is as it stands at the moment. We're actually standing, from this photograph, we're standing outside of the underground station, Mill Hill East. So you can see just how close the development is to the infrastructure there. Just 2 minutes walk to Foxglove and Iris Apartments, which you can see in the foreground here. And as you can see, we've managed to complete the superstructure of the building, and these properties are due for completion next June and later on into December next year as well. So here we go. This is the rundown of our project area in particular. So we start with October 20. We are delivering the first blocks, and we are moving round the development. So we're going to Iris Apartments, Foxglove Apartments, and then we're moving round and completing in June 2021. Now, a lot of people have asked about delays to construction programs, and also how long this can last for before we have impact of delays on construction. So what I can say to you is we've built a contingency plan for coming back to work which will accelerate all of the product which is due for completion up until June next year. So obviously we are going to prioritise the product that is being delivered this June and for December, but we're really focused on driving as much volume into our business as possible over the next 18 months. And rest assured, a business of this size with a huge subcontractor network that we work closely with, we can react very quickly to a requirement for accelerated build program. So the development itself, Millbrook Park, it has 297 private homes in total, 113 one-beds, 177 two-beds, 3 three-bed houses and 4 four-bed houses. So Millbrook Park, the amenities within the development, it has a landscape communal gardens, it has beautiful parking facilities, and you can see the urban landscapes that we've developed here as well. You have car parking outside outdoor space, including recreation area for kids and play parks as well. So bike storage we have across the development, and we're even building our own co-op supermarket into Foxglove Apartments. So there will be a commercial element to the development as well. And as I mentioned, you have Waitrose and Virgin Active Gym on your doorstep. So this is what the development's going to look like from the road. It's beautiful London brick finish, and all of the properties have outside space, whether it be balconies or terraces. And you can see that we're really improving the streetscape and the landscape around the development to enhance the local area. As always, Barratt London finishes the properties to very high standards. So we have floor to ceiling glazing throughout the properties. We have outside space, as I mentioned, and we have options for engineered underfloor heat, engineered wood flooring, and also the kitchens and bathrooms come completed as well. So all facilities that are required from your kitchen, utilities, your oven, your hobs, your full-size fridge, freezers and dishwashers, even wine coolers in some of the properties. And then your bathroom, you have your vanity units, you have your showers and all of the amenities that are required in your property. So these are one-bedroom properties starting from £427,000 and two-bedroom properties starting from £550,000, both for June completion. I suspect if we get back to work in the next 3-4 weeks, it looks like we're going to be able to do, then we'll be very close to hitting those targets. But if there is any change to construction, we will keep in touch with everybody through that process. So investing in Millbrook Park, there's a leasehold of 999 years from 2017. So as far as the legal setup is concerned, that's the same as freehold property. It's still your own property, your own space that you own in London. So the houses are freehold, which is really unique for Barratt London. We tend to offer leasehold properties on our houses, but all of the townhouses and houses at Millbrook Park are freehold. You have a ground rent that you have to pay, which is 0.1% of the property price, and that's capped in line with inflation over the next 10 years. The estimated service charge per annum for a one-bedroom is £1,700, and for a two-bedroom, £2,371. And then there's also an annual charge of £265 if you take parking space as well. So reservation, so £2,000 reservation fee, 10% on exchange of contracts within 28 days, minus the reservation fee that's already been paid, and then 90% on completion. A really good way of taking advantage of any future growth. If you're buying a property that's going to complete in June 21 or beyond, then you will be putting down just 10%, but you will have the opportunity to grow that capital over the next year or so. So Millbrook Park USPs, great transport links. Mill Hill East Underground Station is a Zone 4 project. It's got great access to central London, but also to M1 and to the north of London as well. So Barratt, as the first leader developer in Millbrook Park Master Plan, will be delivering the product first. So we are really proud of the speed that we build at and the ability to deliver the projects very, very quickly. But being close to the tube station, it means that you have access to the regeneration area. You can invest in these properties whilst your tenants or your own access to the underground station will be uninterrupted and will be completed. The rest of the regeneration will be happening behind you, and with that grows your capital investment as well. It's within the Greenbelt and undiscovered affluent areas in North London, and most competitively priced for the Millbrook Park regeneration area. So we're very proud, again, going back to that root value, that core value of affordability and good quality properties that people want to live in good locations. So I'll just highlight very quickly, this is a map of air quality, and no doubt everybody has noticed throughout the COVID-19 lockdown that the air quality across London has improved. But this really highlights the benefit of living just outside the centre of London, having that much better air quality. It's still got good links to the city. But people who are looking for good quality lifestyle, access to open green spaces and a healthy environment to bring up your kids and to live in. This really is a fantastic development to consider. It also benefits from the Help to Buy scheme. So first-time buyers can also access this development, further driving great demand for Millbrook Park. So looking across London, the property prices in total, the Barnet, which is the suburb that Millbrook Park resides in, saw one of the highest growth rates for the last year. The change in price from the last year was 2.8% increase. And across the county, you can see that this has been a consistent growth, and the median prices now are growing above £600,000. So again, looking at that long-term trend of growth, there is not a better time to invest into your own property or a property for investment. Regeneration areas is really important. If you consider the regeneration of 2,240 homes across Millbrook Park, we can compare that to a local, another one of our projects, local project, which is Hendon Waterside, where we've seen 128% growth for our buyers in that project since it began in 2012 to 2019. You can see the median for London is 56.4%. So that regeneration effect is really important to drive that capital growth. If we look at the percentage increase in price growth, again, you can see that the Northwest Corridor, where Millbrook Park is located, has experienced and continues to experience the leading price growth in London. So really popular Northwest Corridor for that investment and for that lifestyle-driven opportunity to buy. So I just want to finish with an overview of the portfolio of Barratt London. We have over 7,500 properties under construction across London at the moment. We chose to move out of central London and to focus on delivering volume of good quality, affordable properties across the capital. Properties that people really need to live in, whether it be key workers or people who have access to or have jobs in the city centre but need to have easy access. So you can see Hayes Village, High Street Quarter close to Heathrow Airport, New Mill Quarter in the south, Upton Gardens in the east next to Canary Wharf, and also a brand new project, Newmarket Place, which is coming again just a couple of stops from Canary Wharf. But I would urge you to look and focus on this Northwest Corridor here, where you can see we've focused as a business with Hendon Waterside, I mentioned earlier, great regeneration project. Eastman Village, a fantastic regeneration of an old industrial estate, being the Kodak factory, that will again deliver over 1,000 new build properties to the London market. Then we have Ridgeway Views and of course Millbrook Park that we've focused on today. So a really great portfolio across the capital. And if Millbrook Park isn't of the correct location or it doesn't suit your requirements, please contact Marc and my team through Benham Reeves, and we'd be happy to help you navigate the portfolio. So something that we've really started to see great traction with in the investment market, we've got a great partnership now with Benham Reeves, and Marc and his team have delivered a fantastic investment offering for all landlords who are purchasing property through Barratt London, and in particular Millbrook Park, where we're offering a 5% rental guarantee for 1 year. So it's a hassle-free solution that Benham Reeves have delivered for us. And what I would say is, as a business, we really focus on business to customer transactions. So 98% of our product is sold to owner occupiers. But where you get a landlord who's investing in a property, their first question is, where am I going to get a tenant from? Now, Benham Reeves have got a fantastic network of offices across the country, across the city. And because of that, they can achieve the best rental returns in the local areas and local markets that they operate. But having this rental guarantee, first of all, means you have no headaches as far as furnishing the property, putting your washer dryers in for your tenants or your flooring or whatever is required to deliver the property to a tenant. But most importantly, you don't have to think about finding a tenant. Benham Reeves will do that for you. And the rental guarantee will kick in as soon as you legally complete on the property. So I'll hand it back over to Marc, who I think is just going to give a brief overview. But thank you very much for your attention, and I hope you enjoyed the presentation on Millbrook Park. If you have any interest, please contact us through Benham Reeves, and we'd be happy to take your questions. Thanks, Marc. Over to you.
Thank you very much, Stuart. Stuart, just quickly, what's the price per square foot? I've had 4 or 5 questions come in. What's the price per square foot?
So price per square foot is starting from £560 per square foot, Marc, but it depends on the 1 bed, 2 beds, 3 beds, obviously,
okay,
as well as the property.
That's great. So as Stuart said, we are offering a rental guarantee on this project, and actually on most of Barratt's projects now, because we believe in it very strongly. We're giving you 5%, and it's really as simple as Stuart said. We give you an in-style direct furniture pack. For this, Stuart's also throwing in free flooring, a free washer dryer, and the rental guarantee kicks in the day you complete. We start paying you rent. So it really is a pretty comprehensive package for any investor. You don't have to worry about what the market's doing. We take that risk, and we believe in it so strongly. The 5% is not over the top. It's what we think you'll get when the rental guarantee ends. So that's very quickly on the sales part. We are going to answer some questions now, and there have been lots coming through. And so the first one was, I'm going to take this one because it's from a Mr. Sanghi, who's based in India. And he says, I'm based in India and just wondering how easy can I get a loan and a low rate? Well, obviously, as I mentioned in my talk, borrowing is definitely there. The banks are all wanting to lend. They make their money from lending, so they're trying to lend. We have 3 offices in India, in Delhi, Mumbai, and Bangalore. We help only Indian nationals there. And absolutely, we can assist. I mean, there have been 5 or 6 questions about lending. We can absolutely assist with loans, whether that's with UK lenders, and we are offering loans. We just completed something last week with a client with a UK lender, with an attractive rate, and we agreed one the last month again for another Indian national, again with a UK lender. Banks, as I said, are fully capitalised, keen to lend, and the rates are anywhere from, for UK lenders, for UK buyers, they're anywhere from 2%. For overseas, they're anywhere from about 3% upwards, and the loan to value is 70 to 75%. So that's just very quickly on that, because so many people keep asking about lending. The second one's for Stuart. It is a bit more poignant to Barratt. Mr. Lowe asks, what's the future for Barratt where you sold the freehold given the cladding issues? I'm sorry, but it's a question people keep asking.
That's okay, Marc. Yeah, it's at the forefront of everybody's mind following the Grenfell Tower situation. Now, whilst we do sell our freeholds on, we are often approached by companies, especially funds who want to purchase properties and freeholds from us. We're very, very careful who we sell our freeholds to, and the reason for that is we need to make sure as a brand that we protect the long-term future of all of our developments, and first and foremost the safety of the business. I can't tell you really, you know, the business decision-making process at an exec level and the group leadership team is really driven by health and well-being, and making sure that we put both our employees and our customers' safety and well-being first. There have been examples where we've gone back to sites where we are out of warranty, we're completely away from any responsibility, but as a responsible developer, we've gone back and we've made the required amendments to the cladding or to the building controls to make sure that we are compliant with all of the new regulations. And we continue to review all of our projects across the UK and make sure that not only are they compliant, but we're also pushing best practice and making sure that we have the latest and greatest materials and technologies on site. So it's an ongoing process, Mark, but we're certainly on top of it, and there's a key working group that takes care of that for us.
Okay, that's great, and I think that gives a lot of confidence to people, especially as Barratt's such a big developer. One question I've just seen, which is quite interesting, from Mr. Bhatia. All around the world, the property prices are going to come down by 25 to 35%, maybe more. What is your forecast on this, and has the downfall been factored into prices? I mean, my honest view on this is, I know what the media is saying, but actually the UK media, as I said, are not being so negative on this, is there will be no drop in prices in the UK. I mean, I've given the forecast we've given, but the reason at the moment things are as they are, we're on hold. There are no transactions. But the fact that there are no transactions does not mean that prices have dumped and there is massive 20, 30, 50%. I mean, I heard someone yesterday, they were saying in Malaysia, they were saying 70%, which is just crazy. We feel that when the lockdown ends, the market will get back to normal, there will be pent-up demand, and there will be no fall. The only place you are able to see deals at the moment is from developers that have existing stock that they may or may not need to get rid of, and they will therefore do a deal. So that is why I'm saying I don't feel there'll be drops, because the market is strong and it was recovering before, and when this is out of the way, the on-hold will come off. So another question I think is quite interesting for Stuart was, Miss Pal asked, I have a Barratt property that has yet to complete. How will the property complete on time with the current crisis?
That's a really good question, Mark. So a lot of our customers are getting in touch and asking about completions, and we have started the process. So our customer services teams are communicating out to all of the people who are either reserved and looking to exchange contracts, because obviously there are issues there at the moment with regards to valuations, mortgage offers, and that sort of thing. And then also through to completion, where you've also got issues with them. So there's a number of different facets to the problem. One of them is, of course, the physical building of the project. Now, of course, whilst we can't build at the moment because we've shut the sites, this was in fact voluntary. And across the industry, you saw all of the construction sites close. And that was really, I believe it was putting the welfare of the workers first and making sure that everybody was safe and well. But we are able to restart construction at any time. We've put contingency in place, as I said earlier, to accelerate the build programs as soon as we go back. And having a business of this size means that we can divert attention. So I'll give you an example. Where we've bought new land, and usually we would be building foundations and we'd be putting infrastructure in, we've diverted those resources into the sites that have completions coming up. So from a construction perspective, we're very confident that we can react very quickly and we can deliver on as close to on time as possible. Now, as far as the legal process is concerned, so of course you need to have valuations on the properties, and we're working really closely with our panel of lenders and with our mortgage brokers, L&C and Talk24. And again, as you can imagine, the business of this size, we have good weighting and good partnerships with these businesses. They are starting to do desktop valuations, and if they've visited one of our sites recently, then they can progress the legal side as well. So the only issue that we have at the moment is that the leases need to be signed with original signatures rather than electronic, but everything else, as far as conveyancing is concerned, has been moved to an online electronic platform. We can even take AML certification over video calls, and we've tried as much as possible to react. But we will come back very strong as far as construction output's concerned, and I don't see at the moment a great deal of slippage past 2 or 3 months at very worst.
It's great. So there's a couple of questions. Obviously, a lot of clients who listen in are existing clients and they're investors, and there is a lot of worry about that. So I've got a couple of questions. I've got one from an existing client who's saying, I own a property fully managed by Benham Reeves. Tenant's contract is finishing next month. They're not renewing. How is the B&R process during COVID to find new tenants? I mean, thank you for that question. And the second one is, I currently own a property in London. Should I be worried about my tenants not being able to pay rent and we cannot evict the tenant? So the first point is, what are we doing during COVID? All of our teams are working from home. We are still, every single one of our property that was empty has had a video on it, so we can do viewings by videos. We are letting properties every single day. We are making sure that we are covering ourselves off, that landlords are not left with empty properties. It's slower for sure, because people don't want to come out. Having said that, people are still doing viewings where the property is vacant. Where the property is occupied, which the first one is, then we cannot do a viewing unless the tenant has already moved out. So my view on that is our process would be to do a video and do an off-plan virtual viewing. However, the reality is the tenant definitely going to vacate? Because if they don't vacate, they continue paying the rent. So what we're seeing is 9 out of 10 tenants whose tenancy is coming to an end during this period are saying, I can't possibly move out for my stuff because it's difficult to get removals and I can't move anywhere else. So can I stay on? So hopefully that will happen. If it doesn't happen, then when the tenant leaves, then we will get a video done and hopefully then we'll let it. On the question of should I be worried about my tenants not paying rent, I did talk about it. Landlords, there are challenges right now, but this is going to be short term. A lot of our tenants are indeed corporate tenants who obviously aren't having problems. But for individuals, my advice is to offer a reduction with a deferment. Where possible, you need to empathise with people. If they can't afford to pay and they have nowhere to go, it's going to make it very difficult. So we're suggesting empathising, and we are working through any issues we have. The thing with if they don't pay and they sit there, then you will have to evict them. And the process has changed to 3 months at the moment, which is making things a little bit more difficult. But generally speaking, the courts will be back to normal. They'll be a little bit more busier than normal, but we hope it'll go back to normal. So it shouldn't be an issue. I'll give one to Stuart. Miss Guo asked, do I need to come to London to buy a property?
Again, excellent question. So as Marc said, in the same way, all of our functions of our business are operating well at the moment. And I would highlight that although we're not selling at the same volumes as we were pre-COVID-19, as a business, we've been averaging over the last 4 weeks 80 properties per week as far as sales are concerned, which is a great number and shows that, as Marc said, there are people who need to buy properties. There are people who need to move, in the same way as there are people who need to rent properties. So I think that consistent transactions are really the needs-based purchases. And I've completed transactions with buyers from China, from Hong Kong, from Singapore, and from Dubai over the last 5 weeks. And there is absolutely no need to visit the property in the UK, or indeed to come to the UK to do the legal side of things as well. We've got great partners with our panel of solicitors, and they're all set up for home working. We have, as I mentioned, we've changed our policy on AML, anti-money laundering documents. So when you purchase a property, you need to provide your passport and your proof of address. We can now certify that over a video call, which means you don't have to attend a notary or a solicitor to do that. All of the conveyancing process, whether it's taking your reservation fee or choosing the property, can be done through virtual viewings. It can be done through online meetings to do the reservation paperwork. And then moving forward through to exchange of contracts, you can deal with your solicitors. Again, they're all set up for online as well. So there's really no interruption to the capability of purchasing. And I really believe that the transactions that we're seeing now, people are really taking advantage of the opportunity.
Great. 2 more questions have come. They're quite similar. One from Mr. Williams and one from Miss Byrne. If I buy a property before stamp duty rise in April, how long will it take to complete? And do I pay new stamp duty if I exchange before April 21? So I'm assuming both of those are from overseas people. So the new stamp duty for overseas buyers comes in April 2021. If you have not exchanged before they announced it, which was in March this year, then if you don't complete before April 2021, you will have to pay the additional 2%. So if you want to avoid that, which a lot of overseas buyers are doing, you need to focus on new buildings, on brand new off-plan. If you're buying second-hand property, and a few people have asked here, should I buy new build or should I buy off-plan second-hand? I'm going to let Stuart answer that in a sec. We can obviously look at second-hand for you, but the average transaction time is much longer, anywhere from 3 to 6 months. So you have to think carefully if you're trying to save the stamp duty that you get on. And with the delays going on at the moment with valuations and viewings and all of that kind of stuff, secondhand may slow down. I hope you'll be able to complete within a year. I'm pretty sure you will, but you just have to bear that in mind. There's going to be pent-up demand. So if you are looking, then you should get in ahead of that. But Stuart, I don't know if you want to answer the question that someone asked about new build versus second-hand.
Yeah, Mark, it's a very, very common question in our marketing suites and when we're dealing with customers. You know, the benefits are pretty obvious that, you know, you get your build warranty, you get a brand new property that nobody's ever lived in before. So, you know, you're getting the best and most modern materials that are being used, and it's really a fantastic property that will stand the test of time. But I think one of the most important things when you're investing in property, and I suspect a lot of your participants on here today will be investors from overseas, is you want a property that's not going to give you any headaches. And, you know, from personal experience in COVID-19, I have a rental property up north, and it's an old property. I've had the boiler that has broken down 2 weeks ago. I've had the tenant that has wanted to move out of the property because of that. Luckily, we had insurance in place for the landlord's insurance, and our insurer went in and fixed everything. But that's a headache that people don't really want to have. And if you buy a new build property, first of all, you get that uplift in capital values as the market grows whilst it's off plan, and you're only exposing a very small amount of money through that process. But secondly, when you put a tenant into the property, you can rest assured that at least for the first 2 years, all they have to do is pick up the phone to Barratt, and whatever the problem is, it will be taken care of by our customer services team. And then going forward, Benham Reeves can organise any issues with any maintenance going forward. But really, you know, we have 10-year build guarantees, and everything is set up for delivering a seamless user experience.
Great. So someone, Dr. Uche from Nigeria, has just asked, tenants are asking for rent drop. Some investors purchase rental property on mortgage at a higher interest rate. How does the current drop in interest rates in UK affect mortgage repayments? That's a very good question. However, that's down to the loan that you took out. And obviously a lot of people take out, there are two types of loans. There's either floating or fixed. Now, if you took out a fixed loan, rates go down, nothing happens. Rates go up, nothing happens. You pay the same. Obviously, a lot of investors like fixed rates. But if you have a floating rate and you're variable, they call it, then your interest rate will come down. Now, if you're suggesting that tenants are saying, can I pay a little less rent because I'm furloughed or I've lost my job, and they're asking for a discount, obviously your bank aren't going to be interested in that. The UK government, one of the steps they made, and I talked about their unprecedented action, was to put pressure on UK institutions, UK banks, to give buyers or investors and landlords a mortgage holiday. So if you are with a UK bank and you are a buy-to-let investor, you should be speaking to the bank and saying, can I have a 3-month or 2 or 3 month mortgage payment holiday? Also, I would check your mortgage to check if you're on a variable rate, because if you are, your rate should drop. The next question, which I think is really interesting, we're only going to have the time for a couple more because I realise we've run over a little bit. And this is for Stuart. And this is a question I get asked a lot, but Stuart can do this one. Would the presence of affordable homes units hamper capital appreciation?
Again, that's probably the second most popular question we get asked in the marketing suites, Mark. We are a massive affordable housing provider across the UK. I think that what's really important is for people to understand what the meaning is of these different schemes. And affordable housing doesn't necessarily mean that you have different mixes of demographics of people in the same development. Affordable housing is about delivering properties that people need in the capital to live in. So this is about delivering properties for key workers, whether it be firemen, police, ambulance workers, NHS staff, school teachers and all the rest. So these are really, really decent tenants, people that appreciate a good quality property and a nice lifestyle as well. What we tend to try and do is, because a lot of our affordable housing is sold through affordable housing providers like L&Q and various others, we will try to keep those separate to the private properties that we're delivering as well. But you know, so I'll give you a really good example. So at Hendon Waterside, that was a regeneration of an old social housing estate. And at the beginning, everybody was really against the change. They were really against the regeneration. But once we rehomed all of the tenants into their new build properties, certainly the temperament changed, and people really appreciated that new environment, that brand new community and lifestyle. So it's a really good question. I would say go down and understand the projects, whether it be either on a virtual viewing or to the marketing suite when you can, and take a look at what areas of the development we've delivered.
Okay, great. I've got a quick question. Well, it's a quick answer to a quick question. Mr. Singh asks, should I wait or list my property in W2? So that's interesting. I don't know if you mean by list, should I put it on for sale or should I put it on for rental? But if it's for sale, as I said, this is really a buyer's market. And while the market is on hold, there's just no point, unless you are desperate, and then you're going to get a desperately low price, to start marketing your properties for sale. However, if you want to, we do have investors and buyers looking, so get in touch with me. But W2, it's a fantastic location. My advice would be, if you're wanting to sell it, is just wait until we're out of the lockdown, things have resumed, get in touch, and we're happy to put it on the market. We can obviously prepare before and get it all ready to go, but there's no point launching it. We can't do physical viewings. It makes it very difficult. If, on the other hand, you're talking about renting it, and should I put it on the market for rental? The short answer is absolutely. Why would you wait? If it's sitting vacant, you should put it on the market and let us find an offer. You know, I keep saying this, and everyone thinks it's a sales pitch. It's absolutely not. We felt that the market would really collapse and we'd be sitting at home with nothing to do. I have never been so busy with clients with questions, and tenants are renting. You know, the market is not as busy as it was, but there are tenants renting. So I think we're going to do a couple more quick questions. I mean, I think the next one is pretty good, and I'm going to ask Stuart. What will be the impact if Brexit negotiations are delayed?
Okay, so Mark, just before I touch on that, sorry. I think Brexit is really important point, but I think it very much people have got used to that new change, and businesses continued as usual. I think just highlighting on your previous point, so as a business, we have decided that we want to, again, take the responsible attitude, but we're not progressing sales actively to exchange of contracts or to completion where people need to have mortgages or there's any uncertainty. And what we've also done is we've added clauses into our contracts and our leases, where if people's financial situations change in the future, then they can withdraw from those contracts, albeit through the normal legal processes. So, and that's really important because we believe as a business that there will be a V-shaped response to this unprecedented lockdown. And when it comes back, we believe that as we always have, we believe that we should sell our property at today's price. And we believe our prices are correct. Our prices are in line with the current market. And so, you know, whilst a lot of developers who have stock on hand and are taking, you know, large offers or large discounts for consideration, we really are not in a position to do that. We're very, very confident in our long-term pricing strategy. And the business's approach is to put the business on pause and wait for the market to come back, rather than to continue to try to trade through a difficult market where people, quite frankly, have more important things on their minds unless they really need to. So just going back to your Brexit question, I think, you know, if we look at the independent agents and you know, looking at whether it be CBRE, Knight Frank, Savills, JLL, and then the independents like yourselves, Benham Reeves, and others across the capital. Before Brexit happened, there was really the uncertainty was driving the difficulty in the pricing or the increases in prices and that sort of when that certainty came back, you saw what everybody refers to as the Boris bounce. But there was certainly that V-shaped recovery. And I think you highlighted a really good point, Mark, right at the beginning of this presentation, that there has never, ever been a downturn in the market that hasn't returned to a long-term increase in an average. So pick your time to get into the market. Of course, when there's a dip in the market, it's more affordable. But certainly keep your eyes focused on that 5 to 10 year investment plan, and you'll be fine.
Good. So I had one here, which again must be from an existing client. Mr. Han asked, what is the process and what to look out for during the process of acquiring a tenant for a London property? I know that's a landlord. So my advice to every landlord, we all want the most rent and we want the tenant to move in as quickly as possible, but give us the most rent. That's the most important thing. But the reality is you need to check out, I say this again and again to our clients, is you must check out an offer in its entirety. Who is the tenant? Is it a 1-bedroom flat and it's a family of 5 moving in, or is it a single person? Do they work? What do they do? How long, when are they looking to move in, and how long are they looking to stay? And these are important drivers around whether it's a great offer, an amazing offer, or an okay offer, because, it's much more important than the rent. As long as it's within a tolerance, you should look at the entirety of the offer. As I said, we all want the most rent, but actually, if the tenant's going to leave after 6 months, that affects the investment. And when you're checking the tenant, referencing is key. You need to do credit check, in-depth checking. That's why we do that, and we don't charge landlords for our referencing. I don't know a single other agent that doesn't charge. We took it on ourselves that we were going to pay for referencing, and we do that. And we do credit reference, we passport check, we check bank statements, we have an independent company that does it for us. And that's why we have such low defaulters, notwithstanding our fantastic credit control and accounts team who do a great job chasing slow people up. But the key thing you must do is just check out the offer, and that way the process will be so much better and will be so much better as an investment. So I had another question. I don't know if you know, Stuart, but you probably do, is when is Crossrail going to complete? Is there any update? Mr. Telonis asked, can you give an update on progress completion estimates of Queen Elizabeth Line Crossrail? Obviously, we're not TfL, and Stuart's going to answer that from our own, what we know.
Thanks, Mark. Yeah, it's been a bit of a moving goalpost since it was announced, and what we do know is that the infrastructure is completed. So they're testing the tracks all across London, and also if you go out to some of our sites which will benefit from the Crossrail, such as Hayes, and the Hayes and Harlington station is actually connected through into central London, and they're already using the Crossrail trains that are on there. So it's imminent, and what we've heard from the government is it's going to be late next year. It is continuously moving, and as I would urge everybody to do, if you're looking to invest in central London and get a capital increase, don't worry about the next 1 or 2 years. Buy something that's going to rent well, that's going to stand the test of time, and as and when these big infrastructure projects come into operation, then of course the market will respond very, very attractively. So don't worry about it too much, but at the moment we're looking at the end of next year.
Okay, and the last question I'm just going to briefly answer, because again I've seen this a few times, is someone asked, is it possible if I buy a London property, do I get residency or a passport? And the short answer is no. Some countries do, but the UK is very strict on immigration. Buying a property in the UK is for your own use or for investment, and it's a fantastic investment. The ROI is astonishing when you get a loan and you get the income, and the rental yield together with the capital growth is amazing from an ROI perspective. But you are not buying a London property. People that buy it or tell you you're going to be able to get a visa or a passport, you are not. It does not give you any rights whatsoever, but it gives you the ability to get a great investment and have an asset that you can come on holiday and stay in, or you can get a good income from it. So thank you. I know that's run over. It's an hour and a quarter since we've been going, but there have been so many questions. I didn't realize we'd have so many. And thank you so much for Stuart for joining us today. And thank you everybody for helping. I hope you found it informative. But if you have any questions, my details are here on the screen. Feel free to email me or call the office, and I'll be more than happy to give as much advice as I can. And if you're overseas, contact any of our overseas offices. And I know there's so many questions we haven't answered, and I will endeavour to get through to them all today and get an answer back to you. And I hope everybody enjoyed it. So thank you very much, and thanks very much, Stuart.
Thanks very much, Mark, and stay safe, everyone. Thanks a lot.
Thank you. Yes, stay safe. Thank you.